Hello, everyone. Thank you for joining us this Wednesday morning or afternoon for some of our attendees, and welcome to this Specialist Trading educational presentation. Now, today I'd like to talk to you about a pattern that I was first introduced to some 4 decades ago and that I continue to use in my own personal trading on a daily basis. Therefore, the title of this presentation is, if you can find this pattern, then you can find consistency in trading, because I truly believe it has sustained me now for that 4 decades, and I use it off and on in my own personal trading. Now, the only trouble is we're never really taught as traders to look for these patterns. We're always taught to listen to the fundamental news, the earnings, or to listen to some guy on TV or what's going on economically. But this pattern is in front of us all the time, in all markets, in all time frames, and in all directions. But let's see firstly how most people view the markets. As we look at this chart here in Adobe, all right, this was coming into this month in October. The way we're mostly taught is to first find the trend, which is right. That's the right thing to do. And someone looking at this would say, well, we are obviously in an uptrend. It has the classic, observation here. We're making higher highs and higher lows. So let's say you decide to buy this based on your analysis. Maybe you're a fundamentalist, maybe you're a technician, maybe you have a strategy that you purchased, maybe you developed it on your own. But let's just say right here you decided to get in, and the next day you have a very nice profit. So you're excited about this. You're in sync with the trend. You feel confident. Maybe the earnings are going to come out, maybe some announcement, but you feel very good about it. And then this happens, right? Look at the uptrend line. The uptrend line continues, and now we are below it. So for all intents and purposes, the uptrend is now broken. So now you're holding the bag with this position. You get a little bit scared. You say to yourself, you know what, this isn't going to work out. So you decide to sell. Okay, look familiar. This is the way most of us trade, myself included, when I first started. And this just happens. It's very normal because we're all taught to look at these very generic, traditional ways of viewing the markets. Okay, well, with this pattern that I'm going to be sharing with you, the first 2 requirements of this pattern today, you actually would have generated a buy signal right here, where most traders would have been getting out of the trade altogether. And if you had viewed this as a buy setup, well, potentially you could have captured upwards of 30 points in the following week. So you see, you were right in your analysis of wanting to buy Adobe. It was just your timing. It was just your entry. It was based on faulty things. And so I know a lot of you would say, well, Steve, I'm not really a technician. I've never really learned how to follow charts. I kind of like to look at the news, or I like to go to that chat room or that blog and listen and see what everyone else is doing. Well, for that sole purpose, Pro Trader Strategies and myself developed the PTS Primo Charting Platform. We wanted to make education and learning how to trade simple. We wanted to make it easy. Therefore, we developed this platform with the goal of teaching you how to be consistent and making it as simple as possible. Everything you're going to be seeing today is a display from the PTS Primo Charting Platform and showing you the process to really become a consistent trader by identifying this pattern. So this promises to be a great educational presentation today. Thank you so much for joining us. My name is Stephen Primo. I'm the president and founder of Specialist Trading. If you're new to my webinars, well, we just have one goal in mind, and that is simply to educate you. If you've come here thinking I'm going to tell you what I think the market's going to do next week or before the election, or what I think the best stock is to buy, or what the best stock is not to buy, or if you think I'm going to tell you what the perfect time frame is, you've actually come to the wrong place. Probably better if you left right now, because that is not our purpose at all. In fact, that goes entirely against our philosophy of specialist trading, because we feel those are the actual elements that lead to upwards of 85% of all traders failing. You see, when you, in our opinion, listen to news, or when you base your trades or decisions off someone or something else, what they're telling you what to do, what the perfect time frame is, or what we think the market's going to do, that's basically like telling someone, I don't know what to do. I don't have enough knowledge. I don't have enough experience, and I'm not smart enough to trade the market. So why don't you tell me what to do? And that would be similar to a brain surgeon saying, listen, right in the middle of an operation, I don't know what to do. I don't have enough knowledge. I don't have enough experience. So why don't you tell me, as my assistant, tell me how to operate on this patient's brain? I mean, that would be silly, right? But traders do this on a daily basis. And that's why, in my opinion, it's estimated that upwards of 85% of all traders fail, because they're taking themselves out of the game. Here's the good news. Specialist trading was formed with that sole purpose in mind, to educate you so that you could ultimately make your own trading decisions. That's the purpose of our company. That's why I teamed up with Pro Trader Strategies to share with you all the things I've accumulated in my 43 plus year, things that have high levels of consistency so that ultimately you can make your own trading decisions. In my over 4 decades of trading, the only traders I know that are still trading to this day are the ones that make their own trading decisions. They don't go to a blog. They don't go to some chat room or trading room. They don't watch guys on TV with their opinions of what they think a stock or market's going to do. They don't even listen to earnings reports. They simply listen to the only thing that they should be listening to, which is the chart in front of them. And that's the same thing we teach all of our students around the world. You'll see that in today's class and the attention I detail, trying to teach you how to really develop that consistency by relying on this chart pattern. Now, before we begin, as always, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to share with you a lot of performance results. I think I have about 150, 160 slides here today. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that since we are an educational company, all examples are strictly for educational purposes only. Now, once again, if you haven't done so already, we have a lot of new faces here we haven't seen before. Please feel free to follow us on Twitter. If you're looking for daily bits of education, you can follow us on Twitter. I post anywhere from signals our strategies or our techniques have generated to little bits of financial wisdom. So lots of great free educational information. Feel free to follow us on Twitter. There's our handle right there. Now remember, we're a little bit different from other webinars you may have attended. Our only goal is simply to educate you. We are first and foremost an educational company. As you see here, my goal is not to force feed you signals. It's not to tell you what market to trade and not to tell you what I think is going to happen in the election. My only purpose, my only goal is to teach you how to trade with a specialist edge. When I was struggling some 43 years ago, when I first started trading, I was on the floor of the Pacific Stock Exchange. When I first started trading, I was struggling tremendously. My mentors taught me the same things I teach my students. So hopefully they'll be able to sustain you the same amount of time they've sustained me. Now, since this is a class, remember, ask me as many questions as you'd like, but I'm a little bit different from other presentations. I don't like to take the questions right during the middle of the presentation. Oftentimes we'll be here way too long. I don't want to take all of your day here. So if you have a question, please wait till the very end of today's class, probably in the next half hour or so, okay? The only question I will answer is this one. It's the most common one, and that is this being recorded? Yes, it is. We record all of our webinars. If you have to leave early, or if you're having technical issues, a lot of times people can't see or hear the screen clearly. Oftentimes it's your own internet connection. You have to log it off and then log back on again. But don't worry, if that still doesn't work, we will send each and every one of you a link to this recording, okay? All right, with that said, let me start out with sharing with you what my mentors taught me, because trust me, if you had seen my trading plan about 43 years ago when I first started, you'd be amazed at how different it is from what it is now. In fact, you may even be amazed at how similar it is to yours, because if you looked at my trading screen, I had maybe 20 to 50 indicators plotted at any certain time, okay? We didn't have, at that time, there was no internet when I first started trading in the 70s, but we had newsletters and I subscribed to all of them. So there are no trading rooms or chat rooms, but I subscribed to all the newsletters, all the trading gurus. I used to watch TV and listen to all the guys on TV, and I waited with bated breath for all the earnings reports because I had earnings estimates. After all, I was making markets in roughly about 50 stocks, so I had to know all this information, right? Or so I had been taught. My mentors, though, saw how much I was struggling because I did all these things I was taught and I wasn't making a dime. They said, listen, Steve, the reason why you're losing is because, first of all, there's no consistency in any of these things. If you're an investor, if you're holding on to a position, 10, 20 years, sure, you need to know about the earnings and the inner workings of the company. But if you're holding on to a position a couple of hours to maybe a couple of months, there's no reason to overcomplicate your trading. In fact, here's one of the first things they taught me. They said, Steve, it's the easiest thing in the world to overcomplicate your trading. Now think of that. Anyone can do that. It makes no difference if you've been trading for 20 minutes or 20 years. You can overcomplicate your trading as much as you like. You can look at a number of indicators. You can look at tons of news. You can go to every trading room or chat room and overcomplicate your trading plan. So it doesn't really take a lot of character to do that. But at the same time, it's the most difficult thing in the world to simplify your trading. Now here's the catch. Once you start to simplify your trading, that's when you start to become consistent. You see, we've always been taught it's the opposite. We've always felt that the more complicated, the more things you pile onto your trading plan, the more chat rooms you go to, or trading rooms, the more people you listen to, the more different markets you trade, the more different time frames, okay? Then you'll be more consistent. It'll make your strategy, your trading style more valid. But if there's one thing I've learned in my 43 years, it's the exact opposite. The simpler your trading is, that's the more consistent you'll be. For example, I'm sure we've all gone to webinars before and seen other people talk. If you listen to the ones who've been trading for a relatively short period of time, that's anywhere from 5 to 10 years. It's still a relatively short amount of time. Most of their trading plans are extremely complicated. Lots and lots of indicators, lots of convoluted logic. You have no idea what it's based off. You really don't understand it. Lots of rules, lots of requirements that need to be met in order for you to buy or sell. It's extremely complicated. I remember going to webinars, not in webinars, but I remember reading systems that I had purchased, reading the rules and everything back in the 70s and 80s. And I remember reading the first paragraph saying to myself, I have no idea what they're talking about. Just knowing right off the bat that this was way over my head. But my mentors taught me, they said, Steve, once you start to strip away what they called useless noise, all right, what is this useless noise? Well, too many indicators, such as volume, such as support and resistance, such as Fibonacci lines, such as overbought, oversold indicators, such as trading rooms, such as so-called trading gurus on TV, such as earnings. Remember, I used to listen to all those things. They couldn't make me a dime. Once I stripped those things away, that's when my trading started to become consistent. Now, as an educator, it's not my goal or my purpose to tell you not to trade with those things. If you feel you need those things, then by all means, go ahead and use them. But it's my mission to tell you that they're in no way required, because I'm still here after 43 years and I haven't looked at any news. I haven't looked at earnings. I don't watch any TV news reports. I don't look at any of that. I haven't looked at those things in 4 decades and I'm still here trading. So they're not in any way needed. If you want to simplify your trading, get rid of the useless noise and start to go on that path to consistency. Okay, so that's our daily philosophy, our daily financial wisdom. Let's begin with today's presentation. Once again, we have a good crowd here today. If you have a question, if you happen to join us late, remember, leave all the questions to the very end and I'll answer them at the very end. In fact, I have to open up a little box here to see what your questions are. I'm not even going to open up till the very end, so it's a waste of time writing in a question. I won't even see it till the end, okay? All right, let's start. I'm going to give you the 2 rules that make up this pattern. Now remember, there are a total, I believe, of 4 rules altogether. Very simple, and you'll see how simple they are, sticking to our philosophy. And I can't give you all of them, but I'll share with you just a couple. They're the most important ones, all right? Rule number 1. Whatever your strategy is, whatever your technique is, whatever your method is, if you get a buy signal, it can only be entered and generated above the 50-period simple moving average, okay? Simple, right? Let's look at this generic chart right here. Most traders will say, well, Steve, the way I discern what the trend is I, look for higher highs or different time frames. And looking at this is, a whipsaw market. There's absolutely no overall trend here. So I can't, trade this. Well, that's not really true according to what we teach you. The first thing you do, rule number 1, is apply the 50-period moving average, what we call our buy-sell line. And now that you have it appearing on your chart, you ask yourself, where is price in relation to that buy-sell line? All right? In fact, I'll say that again. In fact, you should probably write that down on a Post-it and put it on your computer screen. Where is price in relation to that 50-period moving average, the buy-sell line? Because if price is below, you're only going to be or you only have a seller's point of view. Doesn't mean you'll sell at the market, just you'll have a seller's bias. But if price is above, you'll have a buyer's bias. That means the overall trend is up. We never want to trade out of sync with the overall trend. Okay? Same thing works for the downside. Sell signals can only be entered or generated below the 50-period moving average. Once again, if we look at this generic chart, someone say, Steve, this is kind of a rangy chart, nothing really happening. But once we apply the buy-sell line or the 50-period moving average, we ask ourselves the same question. Where is price in relation to that? Price is below. So if price is below, what is the market telling us? Not some guy in a chat room or a trading room. Not some guy in a webinar telling you he knows what the market's going to do. Not some guy on TV. What is the source? The market you're trading, what's it telling you? It's telling you the overall trend is down. So do you want to buy if the overall trend is down? No, we always want to be in sync with the overall trend. Now, is this guaranteed to have every signal a winner? No, but it's putting us in sync with the overall trend, so we will therefore have a higher level of consistency. Remember, the goal is to be consistent. The goal is not to hit home runs. I can't tell you how many traders I knew on the floor who hit home runs, who in a relatively short amount of time made hundreds of thousands, if not millions of dollars in days or weeks. And guess what? Not one of those traders was able to keep that money. They gave it all back. So that's not consistency. What we want is something that has a two-step forward, one-step back approach. And if you trade in sync with the overall trend, you will have that approach. All right, so now that we know what the overall trend is, remember, I don't care, what most students will say, well, Steve, I trade the 5-minute E-mini futures, so what, do I have to put that on a daily bar? No. If you trade a 5-minute chart, if you trade a tick chart, if you trade an hourly chart, have a 50-period moving average on that one chart. There's no reason to look at any other time frame, in my opinion. Remember, once again, I'm only teaching you the things that have shown consistency and that my mentors taught me. I know a lot of you say, well, Steve, do I look at a higher time frame to make sure it's in sync with a lower time frame? No, there's no reason to do that. If you want to, you can. It's not required in any way or any capacity. Why? Because once again, that's conventional wisdom that holds no level of consistency. In my 43 years, I was taught that as well, and all that did was keep me out of some good trades while I waited for the two time frames to line up. So there's absolutely no need to look at two time frames. All you need to do is apply the 50-period moving average on whatever time frame of chart that you're trading, all right? All right, so we know what the overall trend is, whether it's a 5-minute chart, a weekly chart, a monthly chart, or a daily chart. Whether it's a currency pair, whether it's a future, whether it's a stock, whether it's Bitcoin. Makes no difference. Now we go on to rule number 2 to find the short-term trend. All right, let's say your strategy. Let's say it's based off the full moon. Makes no difference. If it generates a buy signal, you are obviously above the 50-period moving average. It closes above the 50-period moving average. And on top of that, the signal bar, that's where all the rules and requirements have been met, must close in the top 25% of its range. All right, so if you're not sure what that looks like, let's say your setup based on the full moon looks like this, okay? Well, if you divide this by 4, you want to see it close in the top 25%. I know a lot of you are saying, well, why do we need that for? We're above the 50. Why do I need to make sure that I can't buy until I see a bar that closes like this? Because the market is telling you it wants to go higher on the short term. So you want these two things in sync. So you don't need to have a higher time frame in sync with the lower time frame. All you need to have is the overall trend in sync with the short-term trend. So once the short term generates a bar that closes in the top 25% of its range, that's telling you that these two things, these two time frames are in sync and the market wants to go higher. So once again, as we look at our generic chart here that we looked at before, we're above the 50, so the overall trend is up. We have a bar here that closed in the top 25%, and look what happened after that, okay? Now, there's no guarantee as how high that will go. It's just giving you a clue. Now, look what happened here. The market sold off, but we're met with another bar that closed in the top 25%, and it kicked in even more. So do you see how you have this added level of consistency when you apply these two basic rules? All right, let's say your strategy is based off earnings, all right? And let's say, according to your analysis, according to your estimates, that was some bad earnings that just came out. You came home from work, or at the end of the day, the earnings were generated at the close of the day. What you want to see is if you get a sell signal, that bar now closes in the bottom 25% of its range. Now, obviously, the sell signal should be as well below the 50-period moving average. So you want to see a bar look like this. If you divide this by 4 separate but equal parts, you'll see that you close in the bottom quarter, the bottom 25%. Now, why are we looking for that? Why can you not sell until you see that? Because now you have the short term in sync with the overall trend. The market is telling you it wants to go lower. So now you have added consistency to your strategy or your method or whatever you're trading. Let's look once again at this chart here, this generic chart, we are below the 50-period moving average, so that means we're only going to be a seller. And on this bar right here, on this day or this time frame, the news was announced at whatever market you're looking at, and it was bad according to your analysis. So you say, wait a minute, that should be a sell signal, okay? And it's valid. We're below the 50, and we closed in the bottom 25%. So that's a valid sell signal. All right, now let's say we had closed like right here. Well, look what happened after that. You see, it's not about picking the top or the bottom. It's about being in sync with the market, having that level of consistency, and then taking advantage of it, all right? So do you see how simple these things are? These are two parts of the pattern that I use in my daily trading that I've used for over 4 decades now. And they are so consistent. You can start using these if you like right now, apply them to your own particular method, and I really feel strongly you will increase your odds for consistency. Or what I would suggest is go back and do your own research. Go back and look at a lot of examples, a lot of charts, whatever market or time frame you like to trade. See if this would work and see if you look back and say, wow, there are a lot of examples here where this really does work, okay? I can almost guarantee you that you will improve your odds for consistency just applying these 2 different rules. Now, guess what? These 2 rules I just shared with you make up that part of the pattern that is one of our most consistent methods. Is called strategy number 4. This was the first strategy that my mentors taught me, and they hold all of the requirements to this pattern that you should be able to look for and identify. They are in strategy number 4. I just gave you 2 of them, 2 of the requirements. There are 2 more that are needed to find out this strategy. Let me talk to you about some of the highlights of this particular method. Obviously, it's a pattern recognition strategy. We're looking for this pattern that repeats over and over again in any market, in any time frame, and in any direction. You just learned 2 of the requirements that make up this pattern. It's designed for traders looking to catch momentum. Now, the beauty of this is that oftentimes this pattern will signal that there's going to be momentum in a certain direction well before it happens. So this is a great strategy for catching that momentum in any market, any time frame. And it only uses 1 indicator. And guess what? You already know what it is. It's the 50-period simple moving average, the buy-sell line. So you already have, see how simple this is? I'm sure you probably thought, well, wait a minute, you probably have like 20 rules to look at this pattern. There's a lot of, support and resistance. We have to see what the volume is, that the institutions. We don't look at any of that stuff. I mean, once again, you can if you want to. But why overcomplicate your trading? Remember, it is the easiest thing in the world to overcomplicate your trading with all those things that really have no consistency. It takes a lot of character, though, to strip them away, to let go of them, and to make your trading simple. But once you do that, that's when you get onto this road to consistency. So let me share with you the process and how you would find this pattern and how you would find the strategy number 4 signals on a daily basis using our platform. Because remember, we developed this platform, the educational platform, to make trading simple. It automatically generates these strategy number 4 setups that have that pattern incorporated within it. Okay, so let's look at this chart in JD, okay? All right, now, this is coming into this month, October. Someone looking at this that is not a student of mine, that is taught by somebody else that uses conventional wisdom, the way we were all taught, would say, well, Steve, there's nothing happening here. Look at this. We're in a range market. Every time it gets to the top of the range, you think it's going to bust out, so you buy, and then it goes lower. So you sell at the bottom, and then it goes back up to the top again. We've always been taught to stay away from this, right? Well, this is the way we're all taught. Unfortunately, there are so many advantageous setups here. We're just not taught how to identify this pattern. If we knew how to identify this pattern, we could see them. So let me share with you the process on our platform. All right, the first thing you want to do is forget about all this conventional wisdom, range, market, support and resistance, overbought, oversold. We don't look at any of that stuff. The first thing we want to do is rule number 1, apply the 50-period moving average, which we call our buy-sell line. So we go to our green strategy tab right here on our platform, and we specifically put it in the far left-hand corner because that's where you start. You click that on, and a drop-down menu will appear. Now we have 4 different ways to view the buy-sell line, 4 different features, all different ways to view it. Let's look at the simplest way, which is simply the 50-period moving average. You click that on, and you'll see it appear. Now you ask yourself that question, where is price in relation to that 50-period moving average? It's above, right? So even if the market's been going sideways, what is the market telling you? It's telling you that the overall trend is still up. So sure, you can ignore this, but this wants to go higher. Until it closes below the 50 for 3 to 5 closes below, it's telling you it wants to go higher. So I wouldn't ignore this if I were you. Now, what was rule number 2? If we're above the 50, we want to look for bars that close in the top 25%, right? And what do we have right here? We have 4 right there. So now the market's giving us another clue. It's telling us it wants to go higher on the short term. So we have the short term and the overall trend in sync with each other. Remember, there's no need to look at the higher time frame. This is all you need. So the 2 more remaining requirements that make up an actual signal that are this pattern are taught in our course. So let's say you decide to become a student of mine and you find the remaining 2 rules, the remaining 2 requirements. Now, our goal as an educational company is not to simply force feed you signals. Remember, that's not our goal. In fact, that goes entirely against what we teach. Our goal is to teach you these things so that you don't have to rely on anyone or anything else. But in the beginning, while you're learning, you need some feedback, right? To see if you're going on the right track. That's why we developed the platform as an educational tool. So in our online course and through your correspondence with me via email, you'll learn how to properly identify these. Strategy 4 setups, how to identify this pattern, which is extremely simple. You've already got half the requirements already. Now, in order to check your work, all you have to do on our platform, because I can't sit with all of our thousands of students around the world and tell them, yes, you're right, you properly identified it. So we developed the platform. It's as simple as this. On our green strategy tab, you find strategy number 4. Click on strategy 4, and in the drop-down menu, click on signal arrows. This will tell you if you properly identified the pattern. Because if you see an arrow underneath those bars that you identified, that means you properly identified them. And guess what? They're all valid signals. All the remaining rules were met. All the requirements were met. So you could have taken advantage and purchased any one of these bars, and that would have been a nice idea because coming into October, you could have had a nice quick 10-point gain. Someone could say, how did you know that it was going to go up? We don't know it's going to go up 10 points. We just know that it wants to go higher. Now, in our course, we have a number of different sell level plans and methods to exit. If you want to get out really quickly, we have methods to get you out quickly. If you want to stay in as long as possible, we have methods to do that. If you want to stay in for the intermediate term, we have methods to do that. Total of 7 different ways to exit. But remember, in the end, it's your choice. This is not systematic behavior. We're not telling you exactly where to get in. We're not telling you exactly where to get out. And we're not telling you exactly where to place your stop if you're wrong. That's up to you to decide. Our job as educators is to provide you with this valuable information, work with you, and then let you decide. In my 43 years of trading, this is the only way one becomes consistent. Remember, I said this in the opening statements, by making your own trading decisions. Now, here's an older example in the spiders. All right, once again, most traders would say, well, this is an uptrend, higher highs, higher lows. I want to buy this, right? Well, what do? We apply the buy-sell line. That's the first thing we do. Forget about uptrends and downtrends. What is the overall trend? We apply the 50-period moving average. And once we see that the majority of the bars are below. Sure, we had one close above, but remember, the rule of thumb is you need at least 3 to 5 closes above or below to tell you what the overall trend is. One close above and then quickly down below will not. Now, in a few minutes, I'll show you a more advanced way to trade this. But for right now, while you're learning, we teach our beginning students, you need at least 3 to 5 to tell you what the overall trend is, okay? All right, so the overall trend is down. Now, rule number 2, we want to be in sync with the short-term trend, which is below the 50. That means we're looking for bars that close in the bottom 25% of the range. All right, so we're looking here at these 3 bars prior to this, and they didn't close in the bottom 25%, but we have this one here, closes in the bottom quarter. So we put together the other 2 remaining requirements that make up the pattern, and we want to check our work to see if this is a valid sell signal. So we click on strategy 4. In the drop-down menu, click on the educational arrows. Remember, we don't provide these arrows just so that you can say, well, what do I buy here? Sell. Should I buy or sell this? I don't have any reason to understand why. I don't really know why there's an arrow here. No, that's not the purpose, the way some other platforms are. We don't believe in that. We want you to first understand why a signal was generated in the first place. These are educational signal arrows for you to check your work. And you're right, that is a valid sell signal, okay? See, our goal is to get you to the point where you don't need these arrows anymore, where you automatically know what a buy and sell signal is. I don't use these arrows. I've been trading this for over 4 decades now. I don't really need these to tell me if a signal is valid. I can see it right off the chart if it's a valid sell or buy signal. But while you're learning, here's how you check your work and a nice little trade there. Now, I know some of you would say, well, Steve, 12 points, I'm looking for these bigger moves. 12 points doesn't mean a lot to me. Well, guess what? That 12 points represented over 1,100 points in the down, because this was the spiders, the ETF that represents the S&P 500. So what a lot of our students do is like to apply strategy number 4, and they like to look for this pattern on ETFs, okay? And it stands to reason if the ETF, which represents these different indices, is generating a buy or a sell signal, then doesn't that mean that the market it represents will go in that same fashion? Or maybe some of the stocks that make up that ETF will go in the same direction. So it's a great directional tool. You don't have to actually trade it with these ETFs if you don't want to. Okay, so we understand the process. We see how simple it is. Let's go through some recent strategy number 4 signals which incorporate this pattern. Remember, you already know the first 2 requirements of this pattern. Okay, I can't give you the remaining 2 requirements. It wouldn't be fair to the students around the world who are students of ours, okay? So remember, you already have these requirements. Okay, Qualcomm, okay? As we can see here, there was a little mini cluster of 3 buy signals. They're all closing in the top 25% above the 50. And look what happened coming into October, 18 points. Not a bad little rally there, right? How about NXPI? Now, this is a more advanced trade only. So it's for aggressive traders only and advanced traders. Why? Well, because the majority of bars were below the 50. But the pattern, see, we closed above the 50 and we closed in the top 25%, and the remaining 2 requirements were met of the pattern. So it did generate a valid buy signal. I know a lot of beginning students say, well, Steve, that's only 1 bar above. You said to have 3 to 5 closes. You're right. So this is a little bit more aggressive way to trade, and they don't always work out this well, but this aggressive one generated a nice 20 points in the first week of October, just a couple of weeks ago. Here's an example in GILD, okay? Now, looks like nothing's happened. In fact, someone could say, well, Steve, this is support. I took that $10,000 class on telling me on what the support and resistance is based off the institutions, and this is major support. I mean, I got to buy here. I'm sorry. I know you always say, look at the buy-sell line. I know you always tell me to look for the, top 25, bottom 25% rule. But, Steve, I can't buck the institutions, right? They always know what they're doing. Well, listen, if you want to follow that, God bless you. It's your prerogative. We're not telling people how to trade. We're just teaching you what has worked over time. And if we apply what we teach you, the first thing we do is apply the buy-sell line, because look what happened. What happened to the support? All right? What happened to the institutions? I traded with the institutions 40 years ago when I was on the floor of the exchange, and they didn't have a higher level of consistency than someone who had just started trading. So I wouldn't put my trust in the institutions. What do I put my trust in? First thing I put my trust in is the overall trend. How do I do that? I apply the 50-period moving average. So now that you see that price is below, why would you ever want to buy anything? You're basically swimming upstream, okay? Wouldn't you rather swim with the current at your back? Well, that's the way it is when you're trading in sync with the overall trend. Now we look to be in sync with the short-term trend, and look at all these sell signals that closed in the bottom 25%. You see how you have that level of consistency if you are in sync with the overall and the short-term trend. Here's an example in ADP. Another example here, kind of a little bit more advanced. We had one close above, but then quickly below. Now, this is what I want to talk to you about consistency, because I know most traders think consistency means that you'll have an abundance of winners. That's not what consistency means. Consistent method is one that has losses. That's okay, but it's able to recoup those losses. For example, this sell signal was a valid sell signal, closed in the bottom 25%. It closed below the 50, and then look what happened. Now, most likely, if you used one of our generic stop placements, which we teach you in the course, you probably would have lost about 5 points, okay, in about 3 days. Now, this is where most traders like to play the victim game and go sulk and say, this doesn't work. Why do I always lose here? You have to be very diligent, because there are always signals being generated. As a matter of fact, the very next bar generated a buy signal, and had you taken advantage of that, well, you could have potentially captured 13 points and made back that loss that you had on the original signal. So this is what we mean by consistency. You want to be able to recoup the losses, and our methods are extremely consistent. Excuse me. Here's an example in ALGN. Once again, we're below the 50. We had a sell-off, but then we closed in the top 25%. So the two first requirements of this pattern are met. 25 points coming into this last week in October. All right. Here's the way most traders would look at this. They say, Steve, I can't buy this. Look at this. Workday is in a really strong downtrend here. I mean, why would I want to buy anything? And you're right. You wouldn't want to buy anything because for all intents and purposes, we are headed lower and all these bars are closing either in the middle or the bottom 25%. But once we add the 50 period, we see here that the overall trend is still up. And here we have a couple of bars that close in the top 25%. And guess what? They are valid strategy for buy signals. So you are above the 50 and the short-term trend is saying it wants to go higher. Look what happened. All the way back up, 33 points. So where most traders would say, I'm not going to touch this thing, we found buy signals at the very bottom using this pattern. Here's an example in VRTX, okay, Vertex, we see here you had to wait a little while, and if you had a very narrow stop, you may have been stopped out, but if you used one of our wider stops, you'd still be in this trade, and potentially you could have captured 47 points. Entirely up to you. An example in Adobe that I first shared with you in the opening display here of this presentation. Remember, we first thought it was in an uptrend when we decided to buy here, and then we got stopped out when we thought that the uptrend had been broken. That's really not an uptrend. Remember, the uptrend is the overall uptrend that's established by the buy-sell line. So we click on the buy-sell line. In the drop-down menu, we click on 50-period moving average. And this is the overall uptrend. Not some short line that you draw that really has no consistency. The overall uptrend is where price is in relation to the 50-period moving average. So there was really no reason to buy here because remember, you want to buy according to this pattern. Now, guess what? Rule number 2 of the pattern was met right here, along with all the other remaining requirements. So a buy signal was generated. All we had to do was check our work. And guess what? We have a valid buy signal. So we never should have bought up here. We simply wait for this buy signal to be generated according to the pattern. And we have potentially 30 points we could have gained in the next week. All right. Now, it was funny on my Twitter page today, a number of people responded like, oh, sure, you want to buy higher because price was above or below the buy-sell line. I said, yeah, but I happen to buy at the very high here or I'll sell at the very low. Well, it all depends if you have a valid exit strategy because as you'll see here, look what happened the remaining 2 days of this trade here. You would have given back the majority of your profit. Maybe you would have even broken even, all right? Well, later on, I'll share with you how you could have exited with a profit right up here. So you see, I know a lot of people that are not students of mine would say, well, yeah, when I buy your stuff, I'm buying at the very top because I'm above the 50 and I'm selling at the very low. So it doesn't make sense. Actually, it does if you have a valid exit, which I'll share with you in just a few minutes here. Here's an example in NVDA. As you can see here, a mini cluster of buy signals closing in the top 25% above the 50, 72 points coming into this past week in October. AVGO, and I know a lot of students would say, well, Steve, I'm looking at this. There's no clear-cut decision here. We're kind of going sideways, so I don't really want to do anything. Well, not really, because sure, you don't have to do anything, but the market isn't just really going sideways. If we apply the 50-period moving average, as you can see here, it went straight up. And we knew that in advance because look at the 50-period moving average. Price was above, even when we were going sideways. So rather than do what most traders do, which is look back in hindsight and say, gosh, I missed that one. How can I could have taken advantage of it? Now that you know this simple rule number 1, you would have at least known that you shouldn't be shorting this. And then you would have looked for that pattern and look at all the setups you would have had here. Had you taken the very first 2 setups right here and held on, potentially you could have captured upwards of 125 points coming into this past week. Now look at, we've been above the 50 the entire time. Do you see the consistency in not trying to short this? The only people who would have lost here are the people who would have tried to sell AVGO, thinking it was overbought or too high, or maybe it's too much resistance from the institutions. Remember, just listen to the source. That's the chart in front of you. Keep your trading simple. Here's an example in ILMN, all right? We're below the 50. We have 3 sell signals. Potentially could have captured 90 points coming into October in just about a week. All right, here's another aggressive trade in Amazon, all right, because we're below the 50 and we only had 1 day close here above, but it's a valid pattern recognition, strategy number 4, buy signal. So if you wanted to, I realize Amazon is an expensive stock, but remember, it's up to you how you decide to enter. You can buy puts, you can buy calls, you can buy some type of spread, with a bias to the upside. You can buy puts if it's a short signal. You can buy the stock. It's up to you. Think of it this way. If I were teaching you how to play golf, I'm teaching you how to swing. I'm teaching you how to hold the clubs. I'm teaching you how to follow through. I'm not telling you that you have to buy a certain club. That's up to you to decide, all right? Depending on how much money you have, depending on your restrictions on that. It's up to you. It's the same way with entering. I'm not telling you to buy options or to buy the stock. That's up to you to decide. We're not an option course that we teach you exactly which option to buy. And we're not a stock course teaching you exactly how many shares to buy. That's up to you, all right? We're just, as educators, sharing you these high probability setup areas. And 300 points in 3 days. Not a bad little setup, right? Based off this pattern. We didn't look at any news. We don't care about what's going on economically in the world. We don't care about what's going on with the election. We don't look at that. If you want to, that's perfectly okay, but that's not required at all. Now, let me look at some really quick weekly time frames just to show you that this works in other time frames as well. Here's an older chart of Halliburton. We're below the 50-period moving average. See the consistency in trading only to the short side? Sure, you could have looked to buy here. You would have had to been very quick because look what happened later on. We're right down below. And look at all the sell signals you could have taken advantage of, all right? Here's a weekly chart in PSA. Doesn't look like much is happening, but once we, apply the 50-period moving average, there's no resistance right here. We're above the 50. So we're not going to look in terms of any resistance. We want to be a buyer. We look for that pattern. Here's one right here. Another one right here. We could have taken advantage of PSA in a weekly time frame. 30 quick points, okay? You see how simple this is? It's not complicated. Trading is complicated because the trader makes it that way. It doesn't have to be. Take it from someone who overcomplicated their trading tremendously 40 years ago. Now, you can also, as I said earlier, apply this as a market directional tool. Here's going back, I believe, to March. Remember when the spiders fell out of bed? Well, look at this sell signal that was generated. The Dow Jones fell 3,200 points in 3 weeks, okay? So let's recap before we go into question and answer. Remember, the buy-sell line is the first requirement of this pattern. It's the 50-period moving average. If you are above the 50-period moving average, you'll only look for this pattern for buy setups. If you are below, you'll only look for sell setups, okay? Now, obviously, there will be some great buys below the 50 and great sells above. But overall, you will not be consistent. You'll have some great trades, and then most likely you'll give it all back. In fact, I would recommend going back and looking at your last 10 or 20 trades. I can almost guarantee that the majority of your losses were due to the fact that you were buying below the 50 and selling above. Go back and do the research, all right? See how powerful this simple tool is. That's the first part and the first requirement of the pattern. The second part was the top-bottom 25% tool. That means that if your strategy, whatever it's based off, gets a buy signal, obviously it should be above the 50 and wait for that bar that closes in the top 25%, because then it'll be off to the races. You don't want to buy if you close in the bottom or the middle of the bar, because the market is not telling you it wants to go higher on the short term. You see, we want to wait for the train to be headed in our direction and then we jump on board. We don't want to jump on board a train that's headed in the wrong direction. But that's the way most traders trade. If you see a bar closing at the low, you say, wow, I must be buying at the very bottom here. And what happens when you do that? Haven't you seen that it keeps going lower and lower? Wait for it to leave in your direction. And then finally, these are the first 2 requirements of this pattern that make up strategy number 4, okay? We shared with you all of these recent setups that just happened within the last couple of weeks. And then we showed you how easy it is to apply this on the PTS Primo Charting Platform. This is the educational platform that makes trading simple because it's all one click away. So before you ask me a question, I want you to ask yourself a question. Do you think this trading pattern can help your trading starting in 2021? We've only got a couple of more months left. Would you like to start 2021 in the right direction? We have a great offer for you today, a great attendee discount so you can start 2021 in the right direction. We're going to offer you strategy number 4, okay? Instant course access. You can be up and running as early as this afternoon. Remember, in this detailed instruction, you'll get all of our different entries, all of our different exits, and all of our different stop placements, all right? The automatic buy and sell arrows. You can apply this to your platform if you use TradeStation, Metastock, NinjaTrader. The complete course rules, okay? This is our strategy number 4 special. Now remember we shared with you how simple it was to apply this on the PTS Primo Chart platform, all right? Well, we're going to give you 6 months of our platform. Now 6 months cost close to $1,000. We're going to discount that for you. In fact, we're going to discount it so low, we're going to give it to you for free. We're going to throw in 6 months of the platform for free. That's where you get the automatic buy and sell line. That's where you get the automatic arrows. But it's so much more with our platform, okay? You're also going to get the 4 buy-sell line features. You're going to get our scanner, our strength of trend tool, which tells you if the trend is running out of steam or not, proprietary exit levels, over 90 of the most prominent technical indicators, personalized tech support, along with a host, a feature of tons of more tools and techniques that I've accumulated in my 4 decades. We just don't have time to go into them right now, okay? This is just the tip of the iceberg. Let me share with you 2 of what I feel are the most important features, though. That's the signal scanner and the proprietary exit levels. You won't get this on other platforms. If you decide to become a student of mine, but use only your platform and just have the add-ons for that platform, you won't get these advantages. For example, remember where we had the drop-down menu here and you clicked on the signal arrows? Well, all you have to do now is click on scan, all right? And this page will appear, all right? Click on load symbols, and you'll see a host of different symbols for whatever market. We provide you with the data for all these different indices, for all these different markets, Asian markets, European markets, currency pairs, futures, for the commodity markets, Bitcoin. Makes no difference, whatever market you want to trade, and then you simply click on scan. In roughly less than 30 seconds, you'll see a series of green and red horizontal bars. The green bars mean there's a buy signal in the corresponding stock. The red ones mean there's a sell. That's how simple it is. This whole process probably takes you less than a minute every night, and you can scan through the entire S&P 500 if you like. Now let me share with you what you could have scanned for that just happened in the last week or so. Now TMUS, okay, T-Mobile generated a buy signal on the 7th, all right? As you can see here, it's above the 50. We had one close below, but right back above in the top 25%. The remaining 2 rules of the requirements are met. You learned that in the course. So you can decide whether you wanted to take this trade. But here's the other feature I wanted to tell you. One of our exit methods we have auto-generated on the platform. These are our range extensions. With one click, you can see these appear. So these can automatically define where the high probability exit levels are if you want to use this method. Now, if you're the type of trader that likes to get in and out quickly, well, then you quickly get out right here. If you want to get out with a more medium range where you exit at point 2 or 3 level. If you want to get as much bang for your buck, you would exit at level 4, but we would suggest exiting everything at level 4 if you're a buyer or a seller. We have this on our shorting example as well, because that's usually where the trend changes. So this is what I thought was funny when I got these replies on my Twitter account today where people said, boy, I'm buying high and it goes up a little bit and then I have to lose money. Not really. If you have the right exit plan, which we give you on our platform, you could have taken advantage of any one of these and in 4 days potentially exited right here. And look what happened after that. Not a bad little exit plan, right? So you're not really buying high and then holding on to a position if you don't want to. But in the end, it's your decision. We're just furnishing you with this information that has shown through the test of time to have high levels of consistency, but then you can decide how you want to apply it. Here's another example. Remember that example we shared with you in Adobe, all right? Well, you could have done the same thing, applied the 4 different exit levels, and right here, had you used the top one, exited with a potential gain of 30 points, and look what happened after that. So see, all of this is on our platform. You will only find this on our platform, and it's one click away. So you get all of this, including 6 months of the platform, including all the rules and educational correspondence with yours truly. That's my personal email address. You can contact me whenever you'd like if you have questions about trading. So let's break this down. Now, a Strategy 4 special, this usually runs $16.50, all right? We're not going to charge you that. We're going to discount the price roughly down about $1,000. We're only going to charge you $695, okay? Now, included with that $695 is 6 months of the PTS Primo Charting Platform free. So this is a great, great offer. You're going to get the full rules to the strategy, educational correspondence with myself, your mentor, and 6 months of the platform. Now, if $695 is still too much for you to come up with, you can develop a payment plan with Pro Trader Strategies. So you can call them up and put together a payment plan. So for a small deposit, you can still be up and running today. So here's how to take advantage of this great, great offer. Contact Pro Trader Strategies. I teamed up with them, and they're in charge of all our tech support. They're also in charge of all the pricing and the discounts. So any questions concerning the actual platform or any questions concerning pricing or discounts or developing a prepayment or a small type of payment plan with them, you all simply have to just contact them either through email or call them directly. I would suggest calling them directly at 310-598-66. That's the number right here. They have trading consultants manning the phones. They're in no way going to try and sell you something. They're there to answer your questions. If you want to develop a payment plan, they'd be there to give you an estimate. And there's absolutely no obligation. They can answer any questions concerning tech support, concerning the platform, and concerning pricing. Now, I said I would answer any questions concerning trading. So if you happen to have a question right now, we have about 5 or 10 minutes left. If you have a question, just go to your question and answer box, and I will be there to answer it. Let's see, we have a question here. Someone says, Steve, can this work on intraday trading? I'm an intraday trader, and I don't see an intraday example. I'm sorry, I put this together, this presentation, and I failed to, I do many times in our presentation show intraday trading examples. This one I didn't because I know we have a lot of stock traders that like this particular pattern recognition strategy. But please, believe me when I tell you, I'm an intraday e-mini trader. That's what I mainly trade. That's my market of choice. Because of my time restrictions, I'm usually giving webinars, and I'm also, teaching students. So I don't have a lot of time to be looking at daily bars or higher. So I like to trade intraday. And I use this strategy number 4 with my trading as well for intraday. So trust me when I tell you, you can use this intraday stock trading, intraday futures, intraday currency pairs. It makes absolutely no difference, okay? Someone is saying, what platforms can I apply this on? Well, most of the major platforms like TradeStation, Metastock, MT4, Sierra Charts, Ninja Traders, even Thinkorswim. There's a few alterations you have to make a Thinkorswim, but you can still do it. Our tech support will help you set that up. But yes, but the only difference is you will not be able to have the scanner. You will not be able to have the ease of access. We're one click away. You know, those platforms, you'll have to search for your indicator icon, click that on, and then search through a list of indicators for Strategy 4. Once you find that on, click that on. And by that time, you wasted about a good 3 to 5 minutes. With the PTS Primo Charting Platform, you see we developed it to make it easy. Everything is one click away. On top of that, you won't get the proprietary exit level plan. You won't get our stop placement, which is also included on the platform. You won't get our tech support. You have a lot of great advantages with using that platform. So I would recommend, toggle back and forth. Use the 6 months of our platform. Most of the traders who use our platform for a limited amount of time eventually sign up for a longer period because it helps them so much and there's so much more information, okay? Let's see, thank you. Amazing affirmation of what I thought I was observing. Great. Once again, if you liked what you saw in this pattern, but you're still not convinced yet, go back and do your due diligence. Go back and look at your last 10 or 20 trades. Like I said, I can almost guarantee that from Rule 1, you're most likely losing because with Rule 1, you're buying below the 50-period moving average and selling above. And then with Rule 2, maybe you're entering, but you're entering too early or too late because you're entering based off of a bar closing out of sync with that top or bottom 25%. If you added these 2 things to what you're currently trading right now, I really feel strongly you would increase your odds for consistency. But why not take it all the way up? Why not become a student of mine and learn the remaining 2 requirements of this pattern? You really increase your odds for consistency trading strategy 4. It was the very first strategy my mentors taught me, and I continue to use it on a daily basis in some capacity in my own personal trading. So it's a great, great method. You just saw a ton of examples right now, current examples. A lot of webinars, I've often said, they have, this fly-by-night system that promises the world, and then you look at the examples, they look amazing, but then you see the date, they're like 2 or 5 years old, right? You want to see things that have worked in the last couple of weeks, in the last couple of days, and we shared with you things that were great examples. Now remember, all of our methods are consistent. What does that mean? I don't want you to go away here thinking that there will not be losses. There are losses all the time. That's okay. What you want is a method that will be able to recoup those losses. You see, you don't want a method that promises the world and has these home runs every once in a while, but then quickly gives it all back. That's not a consistent method. That will not sustain you, but a consistent method will. And that's one of the reasons why I'm still here trading after 40 years. So I want to make all of you, my students, consistent. I don't want to just, teach you some trading technique that will make you a good trader for a couple of weeks or a couple of months. I want you to be trading 20, 30, 40 years down the road, okay? Now remember, as attendees of this presentation, you will all be getting a link after this presentation to this recording so you can watch it at your own leisure. But please, if you're at all interested, make a decision quickly on this great, great offer. We discounted it off $1,000 roughly on this, and plus you're getting 6 months free of the platform included. So this deal would most likely be over in the next 24 to 48 hours. So watch the video. If you're serious about taking your trading to the next level with a really discounted price, take advantage of this and contact Pro Trader Strategies. Remember, there's absolutely no obligation. They have trading consultants manning the phones right now that would be more than happy to give you a quote on a payment plan. You can think about it, watch the video, and then decide, okay? As we close here, I just want to say thank you for attending and taking one last look at our disclaimer. I really wish you the best of luck in trading. I hope these 2 rules can help you. And if you're really convinced to take your trading to the next level, if you really want to start 2021 in the right direction, become a student of mine. I really would look forward to it, okay? Thank you so much for attending. Have a great day, and I hope to see you in class. Bye-bye.